Imagine a market sector just exploding, expanding at an average of over 50% year after year.
Yeah, fundamentally changing, an entire industry.
And that's exactly what's unfolding right now in Insurtech. Welcome, everyone, to the Deep Dive. Today, we're taking a really close look at the Global Insurtech Market.
Right. And for anyone maybe more familiar with fintech, Insurtech is basically the insurance world's version of that.
Exactly. Using technology to innovate, to streamline, well, pretty much every part of insurance.
From selling policies right through to paying out claims.
So this deep dive, it's based on recent insights and projections from cognitive market research.
And our mission today is really to unpack these, frankly, staggering growth figures.
Yeah, understand where this transformation is hitting hardest and, importantly, why it matters to you.
Okay, let's get into it.
Get ready, because, yeah, these are some seriously eye-opening numbers.
What's really fascinating here isn't just the scale, though the scale is huge. It's the speed. How fast this traditionally quite conservative sector is being reshaped by tech.
Totally. It's a fundamental shift in how insurance even works. Okay, so let's start with the big picture, the global view.
Right.
This Insurtech market, it's like a tidal wave of expansion.
That's a good way to put it.
So back in 2021, the global market was valued at, just under $3.7 billion.
Around there, yeah.
Fast forward just 4 years to 2025, and it's projected to jump to over $19 billion.
A big leap already.
But then, here's the number that really makes you stop.
Yeah.
By 2033, it's projected to skyrocket to an incredible $538 billion.
Oh, okay.
That's an overall global compound annual growth rate, the CAGR, of over 51%. 51% year-on-year average.
If you, connect that to the bigger picture, that's not just growth. It's like a monumental scale shift for the entire industry.
It really is.
I mean, going from a few billion to over $500 billion in just 12 years, that's almost unheard of for such an established global sector.
Right.
It really speaks to a complete reimagining of how insurance products and services get designed and delivered everywhere.
It's an absolutely incredible trajectory. And okay, this is where it gets really interesting. Let's pinpoint where this is happening. The regional hotbeds driving this global surge.
Yeah, let's break it down.
North America, for instance, projected to hit nearly $150 billion by 2033.
Wow.
With a really strong CAGR, over 50%.
Okay, so North America's huge. And within that, the U.S. is obviously a massive piece, right? Set to reach over $117 billion itself by 2033.
Yeah, the lion's share.
But it's interesting, Canada actually has a slightly higher projected CAGR.
Oh, really?
Yeah, nearly 53%, growing to over $20 billion.
Huh.
And Mexico's not small either, expanding sharply, projected over $10 billion by 2033.
Okay, so strong across the board there. Now, what about Asia Pacific? You mentioned that might be the biggest overall.
That's the projection, yeah. Largest regional market by 2033, soaring to over $225 billion.
$225 billion.
With a CAGR slightly higher than North America's, actually, over 52%.
That's just an extraordinary leap.
It really is. And within APAC, you've got China and Japan as major players, of course.
Right. China projected around $64 billion. Japan over $46 billion.
Exactly. But the real standouts maybe are India, with a projected CAGR of nearly 54%, and Singapore. Yeah, showing one of the highest individual country TGRs we've seen cited, over 54% as well, expected to hit almost $9.5 billion.
Wow. That says a lot, doesn't it?
How
quickly some emerging economies are adopting this.
Absolutely. It's like they're leapfrogging some of the older tech,
Yeah.
Jumping straight to the latest solutions.
Makes sense. Okay, let's turn to Europe. Still seeing big growth there, too.
Oh, yes. Substantial growth from just under $700 million back in 2021.
Right.
Revenues there are expected to hit almost $95 billion by 2033.
$95 billion. So another massive jump.
Well, and again, a CAGR over 50%. Consistent theme here.
Germany and the UK leading the way.
They're big ones, yeah. Both projected well over $11 billion. Germany maybe even getting close to $16 billion by 2033.
Okay.
But what's also pretty notable in Europe are the really strong growth rates in places like France.
Higher CGR.
Yeah, 52.7%. And Italy, too, over 51%.
Interesting.
And even, markets you might think of as smaller, like Sweden, Denmark, Switzerland, Luxembourg.
Yeah.
They're showing really robust expansion, all projected to be over $1 billion by 2033.
So it's really widespread, not just the biggest economies driving it in Europe.
Exactly. It points to a really broad digital transformation happening across the continent.
Okay, so we've seen these huge shifts in the major economic blocks, North America, Asia Pacific, Europe. But this explosive growth, it isn't just limited to those areas, right?
No, absolutely not. And that raises a really important question. Where else are we seeing these kinds of significant transformations?
Right. What are the other hotspots?
Look at South America, for example. It's actually showing one of the highest regional CIRs. Higher than the others?
Almost 53%, yeah. Projected to jump from just under $250 million in 2021 to over $40 billion by 2033.
40 billion from such a low start.
Exactly. And Brazil is a huge part of that. Over $13.5 billion projected just for Brazil.
So that region's clearly a prime example of markets just adopting digital solutions incredibly fast.
Definitely.
And we can't forget Africa and the Middle East either.
No, absolutely not. Africa, I mean, it's starting from a lower base, sure.
Right.
But it's projected to reach nearly $12 billion by 2033. And look at the CGR, over 52%. Very strong.
Wow. Key drivers there. Nigeria, South Africa.
Yeah, Nigeria looking at maybe $2.4 billion. South Africa closer to $4 billion by 2033. Shows huge potential for digital insurance there.
And the Middle East.
Also showing really robust expansion, moving from about $140 million up to almost $17.4 billion.
Okay. CGR there.
Just under 50%, so still very high.
Yeah.
Saudi Arabia is a big one, projected over $5.8 billion, and the UAE around $1.9 billion. Okay, so we've really established the sheer scale, the speed.
Yeah.
This global transformation is happening everywhere.
Pretty much, yeah. Different scales, but the trend is undeniable.
Right, why? What's actually driving this truly monumental growth across the whole globe?
Right, that's the core question.
Because this isn't just like normal market expansion. Cognitive market research points to some fundamental forces, right?
Absolutely. The research basically highlights 3 key drivers propelling this whole surge.
Okay, what are they?
So first up is innovation. Simple as that, but it covers a lot.
Yeah.
It's about deploying new technologies that are fundamentally changing how insurance works, how it's designed, priced, delivered, everything.
Look, what kind of tech?
Well, think about AI, artificial intelligence. It's being used for much more precise risk assessment.
Right, so you get more personalized policies.
Exactly. Stuff traditional models just couldn't really offer efficiently. Or the Internet of Things, IoT.
Smart home sensors, car telematics, that kind of thing.
Yeah, collecting real-time data, which means your premium could be based on how you actually behave, not just, broad statistics.
That's a big shift.
Huge. And even blockchain is getting involved, helping to streamline claims processes, making them faster, more transparent for you.
Okay, so innovation is driver number 1. What's next?
Second is market liberalization. This is more about policy changes.
How so?
Well, in different regions, rules are changing, opening up markets that used to be pretty rigid, making them more open to new players, more competition.
Because insurance has traditionally been quite heavily regulated, right?
Yeah.
Dominated by a few big companies.
Exactly. But now you've got things like open API frameworks or regulatory sandboxes.
Sandboxes, like a safe space to test new ideas.
Pretty much. They let these new insurtech startups come in more easily, experiment with different business models, and actually challenge the established players.
Which leads to a more dynamic market overall.
Right. More competition, more innovation. It feeds itself.
Okay, so innovation, liberalization.
Yep.
What's the third driver?
And the third one, maybe the most visible, is digital adoption.
Just people getting used to doing everything online.
Basically, yeah. The increasing comfort and, frankly, reliance that both consumers and businesses have on digital tools for everything.
Banking, shopping, talking to friends.
All of it. And insurance is no exception. People now expect that seamless digital experience.
Getting a quote on your phone in minutes, filing a claim through an app.
Exactly. You expect it to be easy and fast. And it's this widespread comfort with digital interfaces that creates incredibly fertile ground for these insurtech solutions to just take off and scale really quickly.
So those 3 things together, the tech, the open markets, the user demand, that's the engine behind this $500 billion projection.
That's what the research points to, yeah. A powerful combination.
It really makes you think, doesn't it? How these forces might be shaping your own interactions. With insurance, definitely, but maybe even financial services more broadly.
It's happening fast.
Yeah. So this deep dive really shows us that a sector that many saw as, slow-moving, maybe a bit traditional.
Staid, perhaps.
Right. Is undergoing this radical digital transformation. not just somewhere else, globally,
Yeah.
but potentially affecting your policy, your experience.
Absolutely.
So here's a thought to leave you with. As this industry keeps innovating, keeps integrating technology at this incredible pace, what new possibilities or maybe even challenges might pop up for you? Whether you're a consumer, maybe an entrepreneur, maybe an investor, what could this relentless change mean down the line?
Welcome back to the deep dive. Today, we're jumping into something really fascinating. It's where centuries of, well, tradition clash head-on with cutting-edge tech. We're looking at the insurtech revolution. It sounds like a buzzword, maybe, but it's really shaking things up, changing how we get insurance, how risk is measured, honestly, even how we live.
Absolutely. And for this deep dive, we're grounding our discussion in some really solid, up-to-date insights. We're drawing from the latest analysis on the global insurtech market by Cognitive Market Research.
Ah, good stuff. So people are getting the latest picture.
Exactly. Think of it as your shortcut to understanding what's really happening in this pivotal industry.
Okay, so let's back up a tiny bit. Insurtech, it's just insurance technology, right? Seems simple.
Well, yes and no. The name is simple, sure,
Right.
insurance technology, but the impact, it's huge. It's genuinely a transformative force globally. You see traditional insurance giants scrambling, really, to keep up, to modernize in this digital-first world we're all in.
Right, they kind of have to, don't they?
They really do. So our mission today, for you listening, is to give a pretty thorough overview of this whole transformation. We want to break down what's actually driving all this growth.
Okay, the fuel behind it.
Exactly. Then we'll tackle the big challenges, the roadblocks that are definitely there.
Always hurdles.
Always.
Yeah.
And finally, look at the key trends. What's bubbling up right now and really pointing towards the future? Where is this all heading?
Perfect. Okay, let's dive right in then. What is driving this revolution? What's the first big push?
I think the most obvious one is just this massive growing demand for digital insurance solutions.
Yeah.
People expect things to be easy, mobile first.
Oh, totally. I mean, who wants to deal with piles of paperwork and phone calls anymore? If I can manage a claim on my phone in like 5 minutes, huge win. It feels like table stakes now, doesn't it?
It really does. And the data backs this up strongly. You look at Gen Z, millennials,
Okay.
something like over 60% prefer to buy insurance only through digital channels. They're skipping agents altogether.
Wow, 60%.
Yeah. It's not just about convenience. It's a fundamental shift in how a huge chunk of the population wants to interact with financial services, period.
And that demand is being met because more people have the tools, right? The
Yeah.
phones, the internet.
Exactly. That feeds right into the next driver. The growing penetration of smartphones and internet access, especially, and this is key, in emerging markets.
Ah, okay. So it's broadening the reach.
Massively. Suddenly, insurtech platforms can connect with way more potential customers. It enables this kind of inclusive insurance access that just wasn't practical before. Think about microinsurance, these tiny, affordable policies for very specific risks.
Like crop insurance for a small farmer, maybe?
Precisely. Or temporary insurance for a delivery driver, stuff that traditional channels just couldn't cost-effectively reach. Now it's possible through a simple mobile app for millions.
So it's about getting insurance to more people, but it's also about efficiency, right? The bottom line for these companies, how are they using tech like AI to cut costs and automate things legacy insurers maybe struggle with?
Yeah, that's a huge piece of it. Cost efficiency and automation are revolutionary here. Insurtech uses AI for, well, almost everything. Underwriting, assessing risk faster, more accurately.
Okay.
Automated claims settlement, simpler claims, processed maybe in minutes, not days or weeks.
Wow.
And then you have instant customer support via chatbots, intelligent ones. All this slashes operational overhead. That fundamentally changes the cost structure.
Which ideally means better prices and faster service for us.
That's the goal. And it also leads to better products, potentially.
Yeah.
Which brings us to another driver. Enhanced risk assessment using big data and the Internet of Things, or IoT.
Right, IoT. So data from our Fitbits, our cars, our smart homes, that kind of thing.
Exactly that.
Yeah.
Real-time data streams. Wearables tracking health metrics, telematics in cars, monitoring driving habits, how fast you brake, accelerate, corners.
My car insurance company definitely wants that data.
Right. And smart home devices detecting leaks or security issues. All this allows for hyper-personalized risk models. Insurance isn't just a flat rate anymore.
So premiums could actually change based on how I drive this month, or if I install a smart thermostat.
Potentially, yes. It allows for dynamic adjustments. It could even reward safer behavior or preventative maintenance almost instantly. It shifts insurance away from being purely reactive, pay when disaster strikes, towards something more proactive, managing risk, preventing problems.
That sounds incredibly powerful and exciting. But, okay, revolutions aren't smooth sailing. What are the big challenges, the speed bumps Insurtech is hitting?
Well, the big one, understandably, is data privacy and cybersecurity.
That makes sense.
These platforms are handling incredibly sensitive stuff. Your health records, financial details, where you drive, how you live. They're gold mines for cyber attackers.
A breach would be catastrophic for trust.
Exactly. It erodes trust almost instantly, and the legal fallout can be immense. So that's a constant, massive concern.
Huge. And related to that, I guess, is the whole regulatory landscape. You mentioned tech moves fast. Laws don't always keep up, do they?
Not even close, usually. That's another major hurdle. Regulatory ambiguity and fragmentation. Yeah. Policy just lags behind the technology.
So it's inconsistent. Different rules everywhere.
Very much so. What's allowed in one country or even one state might be different elsewhere. This creates this incredibly complex maze for Insurtechs trying to operate across borders, or even just nationally sometimes.
That sounds expensive and slow.
It is. They often need bespoke compliance for each market. It really slows down expansion and adds layers of complexity.
And speaking of expensive, getting these platforms built in the first place, that can't be cheap, right? Especially making them secure and compliant?
Absolutely not. The high initial investment needed is a significant barrier. Building or even just integrating these robust, secure, compliant digital systems takes serious capital. It can definitely deter startups, even ones with great ideas, and slow down the pace of innovation overall.
Okay, so data security, patchy regulations, high startup costs. What else? Is everyone actually comfortable with this digital-only approach?
That's the final big challenge we identified: mixed customer confidence. While younger people might prefer digital, many others, particularly older demographics, still value talking to a human agent.
Especially for complex stuff, I bet, like life insurance or a major house claim.
Exactly. There's a natural hesitancy for some to rely entirely on an app or a website for something so crucial. Building that trust in purely digital models, it takes time. It takes consistently good experiences.
Makes sense. Okay, so we've covered the drivers, the things pushing Insurtech forward, and the challenges holding it back a bit. Let's pivot to the future. What are the key trends really shaping where this industry is going right now?
Well, one trend that's already deeply embedded and just getting stronger is the use of AI for claims management and chatbots.
We touched on that with automation, but it's a trend in itself.
Oh, definitely. It's accelerating. Claims processing is getting exponentially faster. Some simple ones truly are resolved in minutes now. But AI is also getting much, much better at fraud detection, spotting patterns humans might miss.
Saving insurers money there, too.
Big time. And providing that 247 support through intelligent chatbots just improves the customer experience overall.
Okay, what else is trending?
A really exciting one is the rise of usage-based and on-demand insurance models.
Like pay-as-you-drive.
Exactly. Pay-as-you-drive auto insurance is a prime example. Or short-term travel coverage you can switch on just for your trip.
Yeah, flick a switch in an app.
Precisely. And those microinsurance policies we talked about, these models offer flexibility and affordability that people really value now.
Yeah.
They fit modern life, which isn't always linear or predictable.
Very cool. Any other big tech waves making impact?
Yes, for those tracking emerging tech, blockchain is gaining serious momentum in Insurtech.
Blockchain. So beyond crypto, how does it apply here?
It's perfect for creating smart contracts. These are basically self-executing contracts where the rules are coded directly onto the blockchain.
Okay. What does that do for insurance?
It boosts transparency enormously. Everyone can see the agreed terms, and the record can't be tampered with. It can automate claim settlements. If a certain verifiable event happens, like a flight cancellation log publicly, the payout triggers automatically.
Wow, no need for manual checks.
For certain triggers, potentially yes. And all this drastically reduces the potential for fraud. It basically builds trust and efficiency right into the system's architecture.
That sounds like a fundamental change. And maybe that leads into the last trend. It feels like the old guard and the new players need to work together somehow.
You nailed it. The final key trend is the surge in strategic partnerships between traditional established insurers and these nimble Insurtech startups.
So they're not just competing, they're collaborating.
Increasingly, yes. It's a win-win. The big insurers get access to cutting-edge tech and agile ways of working without having to build it all themselves, which is slow and incredibly expensive.
Right, they get innovation, speed.
And the startups get access to the insurer's huge customer base, their deep industry knowledge, their regulatory experience, and often capital. It helps the legacy players stay competitive and relevant.
And helps the startups scale up and navigate the complexities we talked about.
Exactly. It's about marrying the best of both worlds, establish trust and reach with technological agility.
So it really seems like whether you're deep in the finance world, maybe an investor, or you're working in digital strategy, or honestly, even if you're just curious about how things are changing, understanding this InsurTech shift is pretty crucial for you.
Absolutely.
This whole InsurTech revolution, it's definitely more than just hype. It feels like a fundamental reshaping. And based on everything we've discussed, it seems like it's really just getting started, isn't it?
I'd agree completely. Digital transformation is accelerating everywhere, and the global insurtech market is right at the forefront of that for the insurance sector. It is fundamentally reshaping the industry as we know it. We're moving towards something much more agile, much more data-driven, and ultimately, hopefully, more personalized for everyone.
Okay, so maybe a final thought to leave everyone with.
Yeah, something to chew on. As insurtech gets better and better at creating these super personalized, adaptive insurance products, using all this real-time data from our connected lives, our phones, cars, homes, wearables. Think about how that changes things. How might this evolving relationship, this constant feedback loop between our data and our insurance coverage, start to influence not just our financial choices, but maybe even our everyday behaviors, our daily choices, all potentially nudge towards creating that optimized risk profile? What does that future look like?
That is definitely something to think about. A really powerful question. We hope this deep dive has given you a lot to consider and maybe encourages you to keep an eye on these, well, really dynamic changes happening all around us.